Well, g'day there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this Tuesday afternoon market recap. The day in and of itself across all three of the US markets was somewhat flat. However, very proudly sitting here saying that 5 out of the 6 trades which we have discussed over the weekend and prior to this weekend's pro class have triggered and they are profitable. What I'm going to do over the next 5 to 10 minutes is walk through each and every one of these 6 trades which have triggered. This is excluding the CVX trade, which I still genuinely love, which hasn't triggered, which I'm still optimistic, which will turn into maybe 6 out of 7 or maybe even 7 out of 7 as the week progresses. But what I wanted to do in particular was just address the stocks which we have been following very, very closely and give you an up-to-date perspective on all of these individual trades. So what I'll do, I'll start with Amazon today. Amazon, we had a trade trigger here at $441.90. We got triggered into this on the Friday on that almost of a false Bollinger Band breakout. We saw the inside day spinning top yesterday. Today we saw the upside continuation up close to $10 on this particular stock. We closed out $445.99, almost $446. First target is still $452. So when we get there, consider exiting out of this individual trade. If you see it pushing up to even $451, potentially take profit off the table. The reason why is because we have this overhead resistance level, which is still going to be a problem to overcome for the stock price of Amazon. If we get above this resistance level for a couple of days, we'll consider entering into new bullish trade setups. However, at this particular moment in time, you need to focus on the current trade setup, which we are currently in, and just mitigate risk by placing your stop below 435, just below the swing low resistance or the swing low support. But consider taking positions off the table at 451, 452 when we get there. And if we do get there, even potentially on Wednesday, if not Thursday or Friday this week. Moving on along, we've got the Google trade setup. Once again, we got triggered into this on the Monday. Now, a discussion over the weekend was that this individual trade setup is probably going to run its course very, very quickly. Here we are at 563.39. It's only up about $3 from our original entry, but I still really like this particular candlestick on the Tuesday. It is continuing in our direction. What I'd encourage you to do, once again, set your stop maybe just above 555. We've got our target up here, 569, 570. I do think we are going to reach it, and it will be a very quick hit, retest, and maybe a rollover at this potential level. So it is going to be a very short-term swing trade. Just be mindful of that with this Google trade setup. But at the moment, we are up about $3 of intrinsic value on this particular trade setup. I didn't really like the trade or the actual candlestick on the Monday. It is what we call a gravestone doji. But again, we're just pushing on higher, and the continuation remains as at Tuesday. Another Bollinger Band squeeze, which is working and running its course as expected. We've just had to wait through 1 or 2 days of sideways consolidation before these 2 trades have worked in our favor. Outside of that, we've got the Goldman Sachs trade breaking out above 216.88. We almost got triggered into it yesterday, but today we are definitively and definitely in this trade setup. Here we are, 218.40. If I zoom on down, we've got a long way to run in Goldman Sachs. So as I spoke about it over the weekend, consider this a new trend trade in Goldman Sachs. If the 3 US markets can break out and get into unison at least that they want to continue the bullish trend from this long sideways consolidation, which has taken place for the better part of 2015. Very exciting because a lot of these stocks are sitting on the knife's edge as to whether they're going to break out or actually reverse. This looks really, really healthy at this particular moment in time. Good volume coming in also during Tuesday's trading session. If you are in this trade, place your stop right below 216 and let this trade run its course. Follow along with the 10, the 20, and the 50 exponential moving average. You could keep it below the 10. Even below support at this particular moment in time. I understand that's a lot of risk, so it's up to you how you want to manage this trade. If you really want to get on top of risk and really minimize as much risk on this particular trade, you can even place it below Tuesdays. I want to encourage you to do that in the event that we see some market noise and then continue. Personally, I'm going to keep mine down here about 214, just above it, and let this trade continue. Outside of the Goldman Sachs trade, we have the Tesla trade again. Now, we've been speaking about this over the weekend. 266.21 was the continuation entry. We spoke about, well, is this going to set up a stair-step continuation? And it appears, as at the close on Tuesday, that is exactly what is happening. We had this 259.38 stop, but only when we got triggered in at 266.21. So we didn't get triggered into it on Monday. We saw a little pullback take place in the price of Tesla. It still held the pattern of that sideways stair-step, but as at Tuesday, it's really broken out, up above or up about $8 on the daily candlestick. I love the candle itself. It's a long day, one white soldier above a resistance level. It's looking really, really healthy on Tesla. And we've got a very nice overhead resistance level up here at $283.88. I don't think we're just simply going to rocket up and hit that over the next 2 to 3 trading sessions. This is probably going to move and run its course, such as Goldman Sachs, where we just get into a nice little trend here. We have a few sideways days, but the overall net movement and the net momentum will be to the upside direction. So please keep a very close eye on that Tesla trade. How many stocks have we recapped as that now? We've gone through Amazon, We've gone through Google, we've gone through Goldman Sachs, we've gone through Tesla. That is 4 from 4 at this particular moment in time. Walgreens Boots and Alliance is unfortunately the stock which is pulled back. However, the caveat to that is that it still looks really, really good because, and let me show you this, if I put on a support and resistance level, right here at about $87.09, we can say to ourselves that, look, the price of this stock has broken out above resistance and it may be pulling back on into old resistance turn support. And this is going to act as the support level to trampoline and push on up to $91.69. So please pay attention to this critical area here. Coming in at about $87, you can move it down just a little bit. It really falls more so down here at about $87.30, more or less where we closed on the Tuesday's end of day candle. So I am optimistic about this Walgreens Boots and Alliance trade. We just have seen some form of a little pullback back into an area of support where the likely continuation of the trend really looks as though it's going to kickstart and continue on up to $91.69. If you're on the trade, I'd keep my stop down here at $85.78. And I'd just be holding this particular trade moving forward. The other stock which I want to reference right now is a stock which I put out on YouTube last week. It was a stock, a nice little trade here. What was it? It was on Disney, DIS, ticker symbol DIS, if my chart wants to work with me. Come on, Disney, Walt Disney. There we go. 113.82 was this particular trade entry. We're here at 114.41. It's only up about 60 cents, but it's looking really, really good. I love this picture right here. We're getting price action above the 10, the 20. The exponential moving averages are separating. Price is pulling away from both. We're breaking above resistance areas. I was a little bit suspect on this one candlestick over here just to see this candle and to see price action not get above it. But as at Tuesday's close, we've reclaimed this all-time high. Volume's looking somewhat decent as well. So I am going to pay very close attention to Disney just to see if this trend continuation is still going to run its course. If we are still going to push on higher and let the price action, of course, determine how high it wants to go and where we will get stopped out of this. In the event that it pushes on up high, we put our stop up and we get stopped out for a profitable trade again. So what I'll do on this particular stock right now, I'll just put a little, where's my right tool? Just here, support and resistance. I'll put a little stop in here, about 112.40. We have, what is the risk profile on this individual trade? It's about $1.40 from our original entry to our stop. And that is going to be the trade setup on Disney moving forward. So we've got our leg in the door, so to speak, on a lot of these individual trade setups. Again, what was it? 4 from 5 or 6 from 7 are profitable. I think it was 4 from 5, which is a really great statistic. Unfortunate about Walgreens at this particular moment in time, but I really like this back test. I mean, very often you'll see stocks, they'll break out, they'll come back down and they'll retest the first pivot point before continuing in their upside direction. You see it happen over and over and over again. It generally happens on the breakout of a long-term consolidation. That's why I'm optimistic about the markets. If we can push above these levels, then we pull back down and continue higher. So I'll keep you up to date as the market progresses and as these individual trades progress. Outside of that, I'm paying very, very, very close attention to CVX. I've made that very, very clear for about 2 to 3 weeks right now. We haven't seen the definitive move yet, but it does seem to be bouncing into support or trying to sell off into support. It's not capitulating, it's not selling off, it's just simply holding and moving sideways. And that gives us some really good price action movements upcoming if it wants to continue its sideways consolidation, the channel which is set up, and we will see those high highs moving back up to those old school resistance levels which have been set up through April, May and June 2015. So I'll sign out from that as at the Tuesday afternoon market recap. I actually haven't done a market recap, so to speak. We've got the Dow Jones still pushing up into resistance. We haven't broken above it. The S&P 500 is getting very, very close to the May 2015 breakout, and the NASDAQ today has left us with what we call a dragonfly doji. I mean, you can't really look too far into this one particular candlestick. It is somewhat bearish at this location, but at the same time, we're still seeing buyers show up right around this level, around 5,150. So I'm still optimistic somewhat in these markets. I've been saying over and over and over again, I want to see these markets shake loose. That would be the best thing for all technical traders right around the world to get out of this sideways consolidational type of pattern that we've been in for the better part of 2015. But at the moment, as I look at these markets and I address them, you still have to, of course, factor in reality. And right now, the Dow Jones is nowhere near, unfortunately, breaking above its May 2015 high, whereas the NASDAQ at the moment is above the high and the S&P 500 is more or less right at that pivot point, that very, very important pivot point. One further market which I will address as at Tuesday is the Dow Jones Transportation Average. Over the weekend, I should say, we spoke about this golden cross, which was setting up as at Tuesday's close. If I zoom in enough, maybe it'll show up, maybe it won't. You'll just have to pay attention to this little color on the right-hand side of my chart. The 100-day moving, 100 simple moving average is the pink color, and the 200 simple moving average is the opposing color right now. If you have a look at these two little things here, these two little price action figures on the right hand side, I can tell that by more or less a matter of points, I mean a couple of points, that the 100 is just moved below that 200 simple moving average. I'm going to pay attention to some of the media reports which are drawn on this golden simple moving average cross, but I explained it to you over the weekend where it's not all that important. More so the price action at this particular moment in time in the Dow Jones Transportation Average is what is going to be most important. Do not subscribe to people telling you that the base is going to fall out of the transports and they were ushering in a bear market. No. Just because you get that golden cross on the market doesn't mean that you need to jump to conclusions long term on this particular market. Of course, we have the three other US markets which we're paying attention to, and at the moment, given this week's price action, they are holding up relatively well, and it has been another net positive week, so to speak, as at the close on Tuesday. So we'll keep a very close eye on the Dow Jones Transportation Average. I think I've covered everything I wanted to do. Great work again from traders right around the world who are watching that analysis class. I cannot congratulate you enough. At this particular moment in time, it's been a really hard time to be a technical swing trader throughout this absolute, just ugly fest of trading, this ugly sideways consolidation, this really quick movements back and forth. But if we get this definitive break, it's really going to usher in a really nice time to be a swing trader once again, as at the majority of markets, or how the majority of markets move each and every year. I think we've put up with enough pain so far for 2015 in the way of overall the environment, conducive or conducive to swing trading. I think we're setting up that shakeout, which we've been hoping and waiting for ever so long right now, and it's getting close to actually happening. So I'm excited about that. I'll leave it as that on this Tuesday afternoon market recap. If you have any questions, email me. I do have a lot, as I can see in my inbox right now, so I will get on to replying to those emails. And have a great evening, everyone. I'm excited to see how the rest of this week runs its course. All the best. Goodbye.